Welcome to this introduction to cryptocurrency trading. I'm sure you've heard about cryptocurrency. You may be very interested in trading it. You've heard about the profits that people are making from it, and you may be wondering how to jump into it for yourself and start making profitable trades. Well, you've come to the right place because this short video is going to give you an overview of how to jump into the crypto market and start making profitable trades right away. Now, of course, I need to give a little disclaimer right there. There's no guarantee that you're going to make profitable trades. You could make money, you could lose money, you could come out even. There's no guarantee whatsoever. That's just my disclaimer. But this is going to show you the process that you can take if you want to make profitable trades. And hopefully you will. Right now, depending on when you're watching this, but likely for many years into the future, we're going to be in a crypto bull market, at least in big picture, right? Small picture, we don't know. Cryptocurrency goes up, it goes down, it fluctuates all the time. But big picture, those of us that believe in it, believe that it's going to keep going up in price for a long time. And in that type of market, it's easier to make profitable trades. All right, so the first question that we need to answer before we look at exactly how to make those trades is, what is cryptocurrency? Well, cryptocurrency is a digital asset, okay? You may have seen pictures like this one down here on your screen where it shows these coins. Right? You've seen the Bitcoin coin that's got like this symbol of a bee on it that's supposed to represent a Bitcoin. Well, guess what? That's not a Bitcoin. That's just something that someone came up with, some artist came up with, or some marketer, somebody somewhere. It's like we have to have something that we can look at to represent this thing because it's hard for us humans to grasp this virtual concept. But it is a digital asset, okay? It's not a real coin, but it's designed to work as a medium of exchange, okay? Kind of like money. We all know what money is. Wherein in individual coin ownership, the records are stored in a ledger, okay? We know what a ledger is. It's like a list of records. We use ledgers for accounting, okay? So those records are stored in a ledger. Where is that ledger? It exists in the form of a computerized database, okay? So it's on a computer, but not just one computer. But first we need to also realize it's using strong cryptography. What does strong cryptography mean? It means that it's private. Nobody can crack that very easily. Okay, it's not like they can just hack into it and steal those records or steal those cryptocurrencies or the Bitcoins. Okay, it's strongly secure. Okay, and so those secure the transaction records to control the creation of additional coins and to verify the transfer of coin ownership. That's very important. That's very much a part of the power of cryptocurrency and what makes it in some ways superior to the offline, physical currency that we know as, the dollar and the pound and the euro and other forms of currency. It typically does not exist in physical form like paper money does. Okay, again, this is virtual. It is digital. It's not something that you can hold. And very importantly, this is something that's very important for most cryptocurrency enthusiasts and supporters. It's not issued by a central authority. It's not issued by a government. It's not issued by the central bank. It is autonomous. Okay, it is like its own. It's like its own government. Okay, so Bitcoin is like its own entity. It's not owned by a government. It's not owned by a central bank. And that's where you hear, decentralization. You hear that term thrown around a lot. That's what they're talking about. They want to get away from where money is controlled by the world's superpowers. And it's like giving the power to the people. That's why you see this little note down here that says "Be free," and it's got these, representations of Ethereum, Litecoin, and Bitcoin. Well, it's talking about be free because it's like they want the money to be free. It can be owned by anyone. It's not being controlled by powers in governments. Now, you've also probably heard the term blockchain thrown around. So when we talk about being stored in a ledger, that ledger is typically a blockchain. And so to understand cryptocurrency, you have to understand the blockchain. Well, the blockchain refers to a decentralized public ledger. Again, decentralized. What does that mean? It means, again, it's not owned by one centralized government or entity. Okay, it's decentralized. It's public. It records the transactions across many computers. That's important. The blockchain has no central point. All the information is stored in many different computers at once across the internet. In other words, there's not just one point of failure. It's not something that somebody can easily manipulate or take control of because it's all over the place. Everybody that uses cryptocurrency, everyone that uses Bitcoin, for example, basically accesses the whole history of Bitcoin every time they use Bitcoin. It's stored in the blockchain, and the blockchain is public. Everybody owns it. So it's not like somebody can just take it and manipulate it and steal, the blockchain or steal cryptocurrency that way. Now, there are ways people can steal cryptocurrency, but the blockchain itself is secure and it is decentralized. And again, this makes it hard for anyone to break into a single computer or to steal the data. So that, the more that you can understand the blockchain, the more you'll understand the power of cryptocurrency and why it's become so important in today's world. Of course, the big cryptocurrency that you've heard of, that everyone's heard of because it was the first one, is Bitcoin. Bitcoin is a cryptocurrency invented in 2008 by an unknown person or group of people using the name Satoshi Nakamoto. Okay, so you may have heard of heard that name before. There are actually a couple of guys who have claimed to be Satoshi. We don't really know who the real Satoshi is. Wow. I mean, I'm actually kind of surprised he hasn't come out publicly, but the fact is, he may not want to because he's probably so rich. He probably has so many billions of dollars of Bitcoin because he invented it. He was the first one that got to mine his own invention. So Bitcoin is a decentralized digital currency without a central bank or single administrator that can be sent from user to user on the peer-to-peer Bitcoin network without the need for intermediaries. Transactions are verified by network nodes through cryptography and recorded in a public distributed ledger called a blockchain. Now, again, I realize that sounds really technical, but again, go back to what I just told you. It's actually pretty simple, okay? It is a digital currency. So in other words, it's like money, but it's not. It's digital, okay? It's virtual. And then where does it all happen? Happens in the blockchain. What is the blockchain? It's not just one computer. It's a whole bunch of computers hooked together like the internet, and it's public. And so it is very difficult to fake or to hack. So it's very secure. And Bitcoins are created as a reward for a process known as mining. They can be exchanged for other currencies, products, and services, but right now, anyway, the real world value of the coins is extremely volatile. Depending on when you're watching this tutorial, who knows? Bitcoin could be worth a few dollars, a few $100, a few $1,000, a few $100,000, maybe even a few $1 million. We don't know what it's going to be worth in the future. There are several crypto exchanges. Okay, so now that you kind of have a basic overview of what cryptocurrency is, what the blockchain is, and what Bitcoin is, we can take a look at how to start trading it. There are many crypto exchanges where we can go to trade cryptocurrency. And by trading, I mean buying, selling, and trading for other types of currency. You can buy cryptocurrency with fiat currency such as the US dollar. So you can take the US dollar and go and buy Bitcoin. You can also take one cryptocurrency and trade it for another. So for example, you could take Bitcoin and trade that Bitcoin for some Ethereum, or you could take some Ethereum and trade it for some Bitcoin. And I'll show you some of those popular cryptocurrencies. Some of the most popular crypto exchanges are Coinbase, Binance, and eToro. Those platforms are free to join. They make money by charging a percentage, a fee for trades that you make, purchases and sales that you make on those platforms. So the biggest ones are probably Coinbase and Binance. Coinbase I really like because it's so simple. It's very easy to join. It is free to join, like I said, and it's very easy to understand. Okay, you basically have a list of cryptocurrencies. It's easy as hitting, buy and sell or hit trade. So here's Bitcoin right now. At the time that I'm making this video, Bitcoin's at $60,294. Again, by the time you watch this video, who knows, it could be a few $100, could be a few $100,000. Right now, Bitcoin has a market cap of $1.1 trillion. If I hit trade, it will allow me to instantly buy Bitcoin. I could buy Bitcoin with money in US dollars directly from my bank account, and I can do that instantly right here in Coinbase. You could also buy it on a credit card, depending on what platform you're using. You can sell Bitcoin if you have any, and you can also convert it. Okay, so if you have a different type of cryptocurrency, you can make a trade. So let's say right now, if I have some Ethereum in my account, right? So this is just sort of a test account that I'm using for this video, but I've got a little bit of Ethereum in this account. I could convert it to Bitcoin. I could convert this $22 worth of Ethereum right now to 0.000366591 Bitcoin. So that right there actually, hopefully, clears up one misconception when it comes to trading and purchasing cryptocurrency, is that you don't have to purchase a whole Bitcoin. You may have seen that the price of Bitcoin is really big. Maybe it's $60,000, maybe it's $600,000, who knows, whatever it is. And you may be thinking, oh, I can't afford to buy a Bitcoin. I can't even buy one Bitcoin. You don't have to. You can buy any fraction of a Bitcoin or of other types of cryptocurrency. It could be a 0.000 something of a Bitcoin. You can choose how much you want to invest. Let's say you're purchasing it with US dollars. You could choose to invest $50 US. And that's going to purchase you, what currently is worth $50 US in Bitcoin. You can purchase any amount. And here on Coinbase, you can purchase a very small amount. What is the minimum? That's a good question. Is it maybe $5? Something like that? Looks like you'd be allowed to buy $5 of Bitcoin. $1, I don't know. Yeah, we don't support totals smaller than $1.99. So apparently you can purchase as little as $1.99 of Bitcoin. That's a very small way to get involved. You can get involved for a very small price and begin playing with it, experimenting. And as I'll kind of explain throughout this lesson, it is risky. It is high risk. It's volatile. We don't know what's going to happen to it. And so while the potential return on investment is very high, you only want to trade what you can afford to lose. Okay, Binance is another one. It's another very popular platform. So let me tell you a little, one of the main differences between Coinbase and Binance is that Binance has a lot more options for types of cryptocurrency that you can trade. Coinbase is limited to what I would consider to be some of the most popular cryptocurrencies available. At this moment, they have 53 cryptocurrencies available on their platform that you can buy, sell, and trade. Okay. Some of those, for example, these are right now they're listed in order by market cap. Market cap means the total value of all of that cryptocurrency in existence. Right now, the total value of all the Bitcoin in existence is $1.1 trillion. The next biggest one on Coinbase is Ethereum. The total value of all the Ethereum in existence is $248.9 billion. The next one is Cardano. $39 billion. Then we've got Litecoin at $15 billion, Uniswap also at $15 billion, Chainlink at $13 billion, and so on. Okay, 53 of them. One of the advantages of Binance is that they have many additional cryptocurrencies that you can buy, sell, and trade. Dozens, hundreds probably. And so, and as you get into some of those smaller ones or some of the less popular ones or perhaps some of the ones that aren't approved for trading by Coinbase, I would say in general, the risk is higher. Okay, so for newbies, one thing I like about Coinbase is that it is somewhat relatively safer because they've already done the vetting for you. Okay, in other words, they have basically, to some degree, vetted these top 53 cryptocurrencies for trading. Okay, they know that these are essentially legitimate companies who are running these cryptocurrencies. Okay, some of them are run by companies. So in other words, they are actually like either for-profit companies, some of them are non-profit organizations, and some of them are just like cryptos that are just like publicly owned, essentially, like Bitcoin. But they have somehow vetted these to make sure that they are legitimate. It's not just a scam. It's not that somebody's just trying to scam and do some sort of you'll hear about ICOs, initial coin offerings, right? Well, you can make a lot of money if you get in on an ICO and buy a cryptocurrency when it's first launched and then, ride that wave up. But if it's a scam, you can lose your money. So this is the nice thing about Coinbase. They do some of that vetting for you. Binance, yeah, they do. Maybe they do some as well, but they also have a lot of the lesser known, less, perhaps less reliable cryptocurrencies available. So again, more risk, but potentially more reward. Let me give you an example. Coinbase regularly adds new cryptocurrencies to its offering. let me find one that they've just recently added, very recently. So Polygon is one that they recently added. Sushi Swap, they just recently added. So like if I look at Polygon, for example, we can see, I'm going to look at a 1 month chart. Okay, we can see actually when they hit Coinbase, when a cryptocurrency hits Coinbase for the first time, it's generally going to jump in price because all of a sudden a bunch of people are buying it for the first time. It's the first time they've seen it because Coinbase is such a big, popular platform. You can see it was hovering here around 28 cents. All of a sudden it got listed on Coinbase and it jumped to 59 cents. If I look at the 1 year chart, you can see here it was going along at, a penny, less than 2 cents, less than 2 cents per unit of Polygon. And then, when it hit Coinbase, boom, it jumped. And so the advantage of getting onto something like Binance is that you can find these cryptos early on in their early stages. You could have found Polygon, when it was 1.5 cents, and you could have invested, say $1,000, right? Very risky. Let's say you invested $1,000 in Polygon at 1.5 cents. Let me do the math on that on my calculator real quick. $1,000 divided by 0.0015. That would have been like 666,000 units. 666,000 something units of Polygon. I've multiplied that. Say then you sold it. It went up to 50 cents. Let's say you didn't even hit the high point. Let's just say you sold it at 40 cents. Okay, you would have made over $266,000 on that. So on a $1,000 investment, you could have made $266,000. So that's an advantage of getting on a platform like Binance where you can buy some of these newer, lesser known cryptos. But again, it's higher risk because this just happens to be one of the thousands, okay? You need to understand this. Listen, thousands, one of the thousands that actually made it to Coinbase. Again, Coinbase only lists 53 right now. There are thousands of them out there. Okay, so there's also a good chance that if you had put $1,000 into, an unknown crypto at the time for a penny per unit or whatever, you could lose that full $1,000. Okay, that thing could just about disappear. On the other hand, the risk to reward ratio is so huge. You're talking about $1,000 turning into $266,000. Well, if you have the money to lose, if you've got the money to invest, to risk, think about if you had found, say, 100 of those. You found 100 little cryptocurrencies, put $1,000 into each of them. That's $100,000 investment. Let's suppose only one out of those 100 blows up. Only one out of those 100 makes it to Coinbase and goes 100x. Well, you still made a profit. Okay, so, and again, I don't think this is going to work this way forever, but this is the way it's been for the last, decade. If you can invest in these cryptocurrencies and find the right ones, find the ones that aren't scams, basically, and invest in them at their lowest point when they're first being launched, you have the potential to make a huge return on investment. Now, here on Coinbase, again, these are ones that are perhaps more mature. Some of them are fairly new. They will sometimes add cryptocurrencies to this marketplace within a matter of weeks of them being launched. That is possible. They may have pre-vetted that crypto before it even had their initial offering. But for the most part, these are mature cryptos that have been around a while. eToro, kind of similar to Coinbase, but maybe somewhere in between. They also have some similarities to Binance. But one interesting thing about eToro that I'll just point out is that they have this copy trading feature. All right, so if I click on copy trading and click copy top traders, it'll tell you what this is. So if you're a complete newbie and you just don't have a clue what to trade, you don't want to have to figure it out on your own, you can sign up for eToro and actually copy successful traders. Successful traders will show you their portfolio and what they're trading and when, and you can copy that. And by the way, if you are a trader, if you are a successful trader, you can come on here and offer that service as well and get paid for it. See, it says, can other traders copy me? you can be approved to participate in eToro's popular investor program. So if that's you, this could be an interesting opportunity for you as well. But generally, I would say for most newbies, I think Coinbase is a great place to sign up with. I personally use Coinbase Pro, and Coinbase Pro is just like Coinbase, kind of like what you're looking at here, very easy to buy and sell, but the Pro shows you streaming charts and allows you to set more complex orders such as stop limit. Okay, so here with these streaming charts, we can see right here we're looking at the one-day chart for Bitcoin. I could look at 1 minute, 5 minutes, 15 minutes, 1 hour, 6 hours. Say I want to look at the 15-minute chart for Bitcoin. Here we go. And this is also going to show us the volume. Okay, so if I look at the one-day chart and I zoom in on this, you can see the volume. If I hover over this right here, so today it's gone up a lot. It looks like I don't have enough space on my screen to show you all the volume, but you can see at least a little bit of it right here. You can see the volume is very important to look at if you're looking at trading, especially on a short-term basis. It gives you an idea of where the market is headed. At least it gives you an idea of the current market sentiment. All right, so a few different types of trades that you may want to think about would be long-term trades. So that would be kind of the classic buy and hold. Swing trading, which would be sort of a medium term. So maybe you buy it, you hold it for a little while. So let's say you're looking at a chart like this, right? So, buy and hold. Okay, here's Bitcoin over the long term, right? It started out super low and it's just gone up and up and up and up and up forever and ever and ever, right? It's had its ups and downs, but as a whole, it's just been going up like crazy since 2009. Buy and hold is just you believe in it long term. You're going to buy it now. So say right now it's $60,000. You believe that that's going to be worth one day it's going to be worth $100,000. Maybe you believe it's going to be worth $500,000, $1 million. You're just going to buy it and hold on to it as a long term investment, as a store of wealth. That's one option. Another option, and by the way, some investors, some professional investors are recommending that you treat that kind of like gold. Okay, so they used to say, hey, you want to put maybe like 5% of your portfolio in gold. It's sort of like a hedge, right? Now they're saying, well, maybe you should put like 5% of your portfolio into crypto, put it into Bitcoin. Because, if, let's say there's hyperinflation, say the market crashes, things like that. Well, crypto can still be a store of wealth. Maybe that Bitcoin will hold its value even if the market crashes. We don't know if that'll happen or not. We don't know if it'll hold its value if the market crashes. But those who strongly believe in it suggest that. So that'd be one option would be to buy and hold. The next one would be sort of like a medium-term trade. So you can kind of see how it often sort of moves in these sort of up and down trends, sort of like waves. And you'll find that with almost any cryptocurrency, just like stock trading. Okay, you could go out and find stock trading courses that talk about, swing trading, medium-term trades, all that kind of stuff. You could study stock trading, and it's very much the same concept for cryptocurrency. The only difference with cryptocurrency is, as of the time of this video, cryptocurrency is generally more volatile than stocks. Okay, so let's say, you see this downtrend, right? So you want to buy the dip, right? Cryptocurrency has been going up, 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 up. Now you see here's a bunch of volume on these 2 big days of selling, and then it's going down, 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 but that volume is also lightening up, right? The selling is kind of easing off. So somewhere around this point, right? So somewhere here on this chart, it looks like around 45,000, 46,000, you don't know for sure if it's going to keep going down. Maybe it'll keep going down, down, down for a while, but because this volume's easing and because we're in an overall upward trend, this is called buying the dip. It's probably going to go back up again. Probably. Again, I say probably based on, making an educated decision. There's no guarantees in this. But you buy the dip, and then you wait for it to go back up again. So you watch it go up, 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 up. You can see there's a bunch of volume on this buying. Then you see the volume start to taper off. Maybe there's a down day. Maybe you decide this is time to get out, right? $57,000. Well, you just made, maybe you bought a whole Bitcoin. You just made $11,000 off that swing, right? So in a matter of, how many days was that? That was the 27th. This is the 11th. So you're looking at 2 weeks. Okay. So maybe you held on to it for 2 weeks and you made $11,000. That's a swing trade. That's mostly the kind of trades that I attempt to make. Okay, to do those kind of trades, you have to research the market. You kind of have to know what you're looking at. You have to be able to sort of look at charts like this, and you have to be able to set goals, right? The other type of trading is day trading, and that is to do very short-term trades. So we're looking at a one-day chart here. Now let's switch it to, say, a 5-minute chart. If I switch it to a 5-minute chart, you can see that, in Bitcoin, for example, there are massive swings constantly throughout the day. Okay, so just shortly ago, within a 5-minute period, I'm going to try to expand that chart so that we can see the high and low better. Well, it's not letting me see it, but basically, if I hover over this, I can see within this 5-minute period, it had a high of 60,490, basically 60,500, and it had a low of $60,223. That's a $223 difference in 5 minutes. Now, to trade that amount, there's going to be a fee. There's always fees, right? So, if you day trade, the more you trade, the lower your fees are. So if you're trading a lot, your fee on that, right now might be like $120. Okay, so, but that's a $250 swing in 5 minutes, and that there's going to be those kind of swings constantly throughout the day. Okay, and if you study these charts and you kind of study the volume and you look at those things, you can pretty well predict. Now, again, there's risk involved. You don't know for sure, but you can make educated decisions about what's going to happen. And so you can make these trades over and over again throughout the day. You can see the price goes up, the price goes down, the price goes up, the price goes down. This happens over and over again every single day. And so you can make, $500, $1,000 at a time, $250 at a time. Short, quick trades throughout the day, over and over again. Like I said, the more volume you trade, the lower your fees are going to be. So that's one thing that day traders depend on. Okay, so if you were just to come in here and make one trade, it's your first time ever buying crypto, and you bought $60,000 of Bitcoin, maybe your fee on that transaction is going to be $300 or $400. Okay, but if you're trading it over and over again, your fee might get down to as low as, say, $40 or $50. And on that, it's a lot easier to make those small profit margins on day trading. So, as a newbie, as somebody getting into this, I would recommend probably not day trading. It's very high risk. It's the highest risk of the three types of trading that I mentioned. Buy and hold is obviously the easiest. It's a way to add crypto to your portfolio and have what institutions would call exposure. You have exposure to it without having to really do a lot of research and work and things like that. It's maybe you invest a very small percentage of your portfolio into crypto. And again, you can do that simply by joining one of those platforms like I mentioned, something like Coinbase or Binance or eToro, and transferring some money from your account. Could be any amount that you want. Could be, like I said, $5, could be $5,000, however much you want to risk, and simply purchasing something like Bitcoin. Now, there are also many other currencies that you could get involved in, and many other cryptocurrencies. Like I mentioned, there are hundreds, actually thousands of them out there. Coinbase has 53 that they consider to be pretty trustworthy. Some of the others that you may be interested in would be Ethereum. So Bitcoin is the most popular in the world right now. It's the first one ever. Ethereum is probably number 2. Because what's interesting about Ethereum is that in many ways it is more useful than Bitcoin. Bitcoin, while it is a very popular store of wealth right now and a lot of people are buying it, is not being used for a lot of things. On the other hand, Ethereum is being developed and used by hundreds, probably thousands of projects. It's being used in many, many ways, and so its usefulness is perhaps much higher. There are trade-offs, though. So one thing that I would mention about Bitcoin is that Bitcoin is finite. There's a finite number of Bitcoins that can be mined, okay, based on the formula created by Satoshi. Okay, I mentioned the inventor of Bitcoin. Okay, only 21 million Bitcoins can ever be in existence. Right now there's 18.7 million. So there's just a couple million more to be mined. On the other hand, with some of these others, they can continue to create more and more. So there can be a level of inflation with some of these. So Ethereum, again, as far as cryptocurrency goes, this is a fairly small number, 105.4 million Ethereum currently in circulation, but that number could continue to grow. We don't know what's going to happen with the Ethereum community. And so that's a big X factor. If this number were to not get any bigger, then the price of Ethereum is just going to keep going up forever probably. But we don't know. Now, one nice thing about Coinbase is that they also have an at-a-glance view of what each cryptocurrency is and what it does. So if I go down here and say, what about Ethereum? Ethereum is a decentralized computing platform that uses ETH, also called Ether, to pay transaction fees, also known as gas. Developers can use Ethereum to run decentralized applications and issue new crypto assets known as Ethereum tokens. So this right here speaks of usefulness. This is something that can be used for many different things. It can be used for creating and running applications. Okay, you've heard about NFTs, non-fungible tokens, these people selling pieces of digital artwork for millions and millions of dollars. Most of those are being built and saved on the Ethereum blockchain. Ethereum is used for applications like that and also creating new crypto assets. So Ethereum is very useful. Also, here on Coinbase, below each cryptocurrency listed, you can visit their official website to learn more about them. So this is very helpful. And then if they have recent news, you'll see recent news about that particular cryptocurrency as well. So Ethereum is one that's big enough that if you're looking to be a long-term investor, say a buy and hold with a very small percentage of your portfolio, and you believe that cryptocurrency as a whole is going to go up for a long time, or you want to have some exposure to it, Ethereum is one that you might want to look to in addition to Bitcoin. Okay, Cardano is one that has a much bigger circulation. Okay, it is a lower priced per unit. It is a crypto that is only $1.22 per unit, but there are 31.9 billion Cardano ADA coins in existence. That's a huge number. Litecoin is a coin that was developed with the purpose of being more efficient than Bitcoin. So on the one hand, that's a pro. That means if Litecoin were to continue to be developed and become better than Bitcoin, this crypto could be worth crazy amounts someday, right? There's only 66 million of them in existence right now. Imagine this becoming worth tens of thousands. It could happen, but Bitcoin is so much more popular that the likelihood of Litecoin surpassing Bitcoin is unlikely. Then you have others like Uniswap. Okay, Uniswap also has a very large market cap. Uniswap is one that is relatively new to the market. We'll go to the chart here. Here's a 24-hour chart. We go to all. We can see it's only been around since September of 2020. It was trading for just a few dollars for most of its existence, and then it's just boom, 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 skyrocketed. And again, this is talking about what it's used for and its usefulness. Okay? It's an automated liquidity provider that's designed to make it easy to exchange Ethereum tokens. Remember, I already talked about Ethereum. Ethereum is currently the most useful. In other words, the cryptocurrency that is most able to be used for actual things like creating applications and pieces of art and just all kinds of things. More things than I can even think of right now. But Ethereum is used for so many things. Well, Uniswap is made to make it easy to exchange Ethereum tokens. Therefore, Uniswap should be very useful. And that's why the price of it has gone from a few dollars to, over $30 in a matter of just a few months. So people have made millions of dollars on this. It's got a market cap of $15.5 billion currently. Okay, there's another one I like to kind of put in the same sort of realm as Uniswap called SushiSwap. I happen to like the name of it because I like sushi, but it's also a very useful tool. Okay, it is a token, right? It's a cryptocurrency, but it's also a tool, and I'll show you what I mean. If I go to the official website, okay, Sushi is an Ethereum token. Okay, so this is actually built on the Ethereum blockchain. that powers SushiSwap, a decentralized cryptocurrency exchange. Okay, right now we're on Coinbase, which is a cryptocurrency exchange. SushiSwap is another type of cryptocurrency exchange, but it is primarily built for exchanging different types of crypto for low cost, and allowing people to invest and earn transaction fees. If I click on the app here on the sushi.com website, it is going to show me their platform where you can trade one cryptocurrency for another very easily through their platform. Okay, and so you can attach what's called a cryptocurrency wallet to it. That's something maybe I should have mentioned in the introduction, was what a cryptocurrency wallet is. There is a misconception, perhaps, that in order to own Bitcoin, you have to have it on some sort of like a flash drive, or you have to print out some special code and put it in a vault or something like that. That's not the case. In fact, that's probably a worse way to do it, because what happens when people do that is they end up losing those things. They end up losing the password or losing the flash drive. You can do that. You actually can. You can actually print out the numbers and the code and all that kind of stuff and keep it that way. You can actually keep it on paper. But a safer and more secure way to do it would be with a reliable platform and wallet like Coinbase. When you sign up for Coinbase, they give you a wallet automatically. Okay, so you actually have a wallet that you can use for trading crypto. That wallet holds that cryptocurrency in it. It keeps it secure. It allows you to trade in and out of that wallet. Okay, so if you have a wallet, certain type of wallet, you can connect it to SushiSwap, and here on SushiSwap, you can easily trade one crypto for another. Because of that, I feel like SushiSwap is probably a potentially useful tool, and therefore the token that powers SushiSwap, I think, is potentially valuable. Now, who knows? When you're watching this, SushiSwap may be out of business. We don't know. In fact, SushiSwap almost did go out of business last year. Okay, they kind of got rescued. Right? They were trading for down 50 cents. Then they went up to over $20. Now, right now it's like $14. When you're watching this, it could be down to 5 cents, or it could be up over $20. Who knows? But in terms of the type of trading that I do, which is swing trading, this looks like right now it probably has pretty good potential. Okay, I can go back over to Coinbase Pro and select the SushiSwap market. So here from this drop-down menu, you can select the different markets. I can scroll down and find sushi. So just like stocks have, ticker letters, usually 3 or 4 letters, cryptocurrencies have kind of done the same thing. So this one, fittingly, is just sushi. Bitcoin, of course, is BTC. Now you can see when they first hit Coinbase, they had a huge surge. That's part of what fueled this big surge. Okay, here's a 1-day chart. And since then, they've basically dropped down. So it looks like they've just been going down forever, but that's just because they just hit Coinbase a couple of weeks ago. If you look at their entire history on a longer term chart like this, you can see that actually they've had tremendous growth over the months. And so if you look at it, if you were to put a curve on this, if you were to put it into a chart, you would see that most likely they have not yet hit their all-time high. Okay, this is still in an overall upward trend. And right now they're in a dip. See, they got overbought. People got too excited because it hit Coinbase for the first time and it accelerated this growth curve, brought it up here too quickly. And so it had a sell-off. It had to have a pullback. So right now, from my perspective as a swing trader, right now we're in a dip. It'd be a time to buy, and then you can sell it again when this goes up again. Now again, this is just an example, just a hypothetical example. Well, it's a real life example because it's something that I'm doing, but hypothetical in terms of I have no idea what's going to happen to this particular crypto. By the time you see it, like I said, it could be pennies, it could be hundreds of dollars, who knows. But looking at the numbers, looking at the charts, it looks like there's a high likelihood that this is going to go up again. And so this is a time for a swing trader like me to buy some of this. And then when it goes back up to say, $17, $18, $20, $22, that's time to sell it and take that profit percentage. All right, so that's sort of crypto trading in a nutshell. Again, the platforms that you can check out are Coinbase, Binance, and eToro. And the types of trading that you could do would be, to buy and hold long term. You could do a medium term swing trade, or you could do a short term day trading. As a newbie, I would recommend staying away from that short term day trading and focusing on one of the other two. And which one of the other two depends on your trading style and the goals for your investment. If you are a passive investor, you're not going to be actively involved in the market, you just want to have some exposure to the cryptocurrency world, then you're going to be a long-term buy and hold investor. Okay, in that case, you want to diversify. Buy what's safe. So buy some Bitcoin, potentially buy some Ethereum, something like that. Maybe by the time you watch this video, those will be different. But buy what are the most trusted ones of the time. Whatever the most trusted cryptocurrencies are, by the time you're watching this, that's what you'd want to buy and hold it. If you are going to be active in the market, if you're more of an active investor, you're going to be watching that investment, watching the market, looking at the charts, and you're going to learn how to read those charts. Then you can look at doing something more like a medium-term swing trading, like I showed you how I'm doing in this video. All right. Hey, thanks for watching this tutorial. Hope you've enjoyed this introduction to cryptocurrency trading. Again, just remember, it's high risk. The potential return on investment is very high. But again, only invest what you can afford to lose. Hey, thanks for watching. Have a great day.